So I see the forces that drove it in the past as weaker than they were in the past. And then on the other side of the equation, we have these much slower but very large forces that move on decades-long timescales. So the institutional adoption of crypto, which really kicked off with the Bitcoin ETF, started in 2024. I think that could run for 5 to 10 years of ever higher and higher flows. We have pro-crypto regulation. I think the impact of that will be felt over 5 or 10 years. So it's not that I don't think the forces that created the 4-year cycle in the past still exist. I think they do, but I think they're weaker. And now we have these 5 to 10 year forces that I think are stronger. And as a result, I'm not calling a super cycle. I'm not saying we've repealed volatility, but I think 2026 is going to be a great year. I think 2027 will be good too.
Market dynamics change, and the old forces that once governed Bitcoin's ups and downs appear less powerful today. In their place, slower moving but far more significant tendencies emerge. One such trend is institutional cryptocurrency adoption, which gained significant impetus after establishing the Bitcoin ETF in 2024. This has paved the way for steady inflows over the next 5 to 10 years, which could support structural growth. Alongside this, pro-crypto regulation is beginning to shape a more supportive environment, also with long-term implications. Together, these decade-scale forces may prove stronger than the traditional 4-year cycles, even if those cycles haven't vanished entirely. In that context, optimism is rising for 2026, with promising sentiment also extending into 2027. As of August 8, 2025, Bitcoin trades in the range of $115,000 to $117,000, supported by regulatory tailwinds and a resurgence in institutional interest. A recent rally followed U.S. policy changes, including an executive order allowing crypto investments in 401k plans, driving a 1.4% climb to roughly $117,500. Analysts highlight strong support near $114,500 and low sell-side pressure, suggesting a possible breakout. ETF inflows remain robust, reinforcing Bitcoin's digital gold narrative and drawing further legitimacy through regulated investment vehicles. In a recent interview, Bitwise CIO Matt Hougan explained that while the forces behind Bitcoin's historic 4-year cycle still exist, they are weaker. Instead, he sees slower but larger decade-long drivers, such as institutional adoption and favorable regulation, becoming dominant, making the coming years potentially some of Bitcoin's strongest yet. We will now bring you clips from Matt Hougan's interview. This is an important video you do not want to miss. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for joining us again.
It's a good point. I've been a fan of the 4-year cycle, and you can't dispute that it's been true, right? 2014, 2018, 2022, all terrible years. The core reason I think it won't be true in 2026 has two halves. On one hand, I think the forces that have driven the 4-year cycle are weaker today than they are in the past. You mentioned the halving. I think the halving is programmatically half as strong every 4 years. And you can make arguments around that. But if you think out 50 years, you have to imagine the halving is not that important. We're not talking about very much Bitcoin before and after each halving. So I think the halving force is half as strong. We've also historically had rising interest rates in 2018 and 2022. I think we have falling interest rates this year. And then we've had blow-ups as well, FTX you mentioned, in 2022. And I think those are less likely now. So I see the forces that drove it in the past as weaker than they were in the past. And then on the other side of the equation, we have these much slower but very large forces that move on decades-long timescales. So the institutional adoption of crypto, which really kicked off with the Bitcoin ETF, started in 2024. I think that could run for 5 to 10 years of ever higher and higher flows. We have pro-crypto regulation. I think the impact of that will be felt over 5 or 10 years. So it's not that I don't think the forces that created the 4-year cycle in the past still exist. I think they do, but I think they're weaker. And now we have these 5 to 10 year forces that I think are stronger. And as a result, I'm not calling a super cycle. I'm not saying we've repealed volatility, But I think 2026 is going to be a great year. I think 2027 will be good too. If you think about an institution that just started thinking about Bitcoin when the ETF launched and does quarterly meetings, their 8th meeting will be in January of 2026. They'll be just entering the buying phase. So I agree, you can have these animal spirits. We may have pullbacks. There may be a little bit of exuberance in the Bitcoin treasury market. I would say that crypto does not feel overly exuberant to me. This does not feel like 2017. It does not feel like 2021. It feels more early stage in terms of the cyclical excitement outside of the treasury space, which I agree there's a little bit pipping up right there.
I was gonna say the Tron IPO really did give me a little bit of a flashback.
I agree with that, and I think there's some risk there.
Not to get too specific, I will, definitely. It was a little,
Tron's a
in the hat,
Yeah, Tron's an easy target, and I agree that there's some risk. And look, if Bitcoin ripped from here to the end of the year, if we ended the year at 300K or something, then I think we could have a pullback. But I don't feel the euphoria. I think these longer 5-year trends are just they're just really strong. It's still the case that most institutions don't own crypto. I think that will change in the next 4 years, and they have a lot of money. It's a tanker, not a speed ship. Yeah, I'd add one more thing that's been on my mind lately, which is the Bitcoin obituaries chart. Yeah. There's been few of those recently, right? Because most people now accept that Bitcoin is not going away. And one of the reasons I think we had these 70% pullbacks was there was not many value buyers of Bitcoin. It started to fall and everyone was like, oh, it's over. It's going to zero. But if people no longer think it's going to zero, I wonder if the cushion comes in sooner, right? Like if we pull back below 100K, are there people who are going to buy instead of letting it continue down to 50 or something like that? I think that may play a dynamic here as well. But I still think it's a really important and significant good in the world. I think if you imagine a world without Bitcoin, the US is unconstrained in its ability to print money, because who are you going to fall back to, right? The US is unconstrained on the debt and deficit sides. In a world where the US embraces and allows Bitcoin to exist, I think it has a significant impact on how the government operates at a point. I think it constrains it. It could co-opt it eventually. But I do think it's more evolutionary than sort of parallel world structure, which I know is discomforting for some early Bitcoin adopters. It's a good risk to consider of that collapse time to the midterm elections, which would be dangerous for crypto. My base case is that the genie's out of the bottle and it won't come back in. And I would note that, the Genius Act passed with 100 votes from Democrats in the House. It's actually somewhat bipartisan. There's a very squeaky part of the Democratic Party that's anti-crypto. And I agree that in a sharp bear market, maybe with some scandals tinged to it, they would pounce on it. But I don't think that's the base case. I think the base case is that crypto demonstrates its value now that it's able to interact with the real world. The U.S. is relying on stablecoins for financing its debt. Bitcoin is broadly held by pensions and institutional investors, and that part of the market just has escape velocity from a regulatory perspective, right? It's like the internet after the 1996 laws. It's now out there, and it's demonstrated its impact on the world, and you can't stuff it back in. So, your scenario, the negative scenario you played out, is possible and would contribute to a 4-year cycle. It adds cyclicality to crypto if it happens, or maybe a pro-cyclical nature to a downturn. Like a downturn begets more downturn if it's time to the election. But my base case is it's actually bipartisan. The majority of Americans want crypto to succeed. It's important for our national security interests. It's important for our national economic interest. Wall Street is now behind it. I think it's out of the bag. And we're in this new, pretty good regulatory world.
And being less volatile is, you see a 40, 50% correction, and that's still a tremendous improvement on past cycles, right?
Yeah, and I think that's the case. I think 70% corrections are in the past. I don't think we'll see that again. I just meant from the political standpoint, if one of the risks to crypto long term is a dramatic swing in the policy, I do think a market where crypto draws down substantially and Democrats focus on it is a potential scenario where there's risk. But again, I really don't think that's the base case. I think once we have regulation and crypto is in Wall Street and in portfolios broadly, I just don't think it goes back. I think we're in a new regulatory world. I think the ETF is a good example of that. Like, we can't not have an ETF. We have an ETF now. It's not going to disappear, and it's sort of a one-way door. And I think from a regulatory perspective, we're moving through those one-way doors. We moved through it on stablecoins. We're moving through it on market structure. I just think we're in a pretty strong place as an industry now.
The 4-year cycle argument has weaknesses today. The influence of halving is fading, roughly halving every cycle, and over decades, it may matter far less. Rates have shifted from prior rises to potential declines, and major shocks like FTX seem less likely to recur. Institutions starting to engage with Bitcoin through ETFs could enter a buying phase by early 2026. This suggests occasional pullbacks are possible, but overall, crypto doesn't feel euphoric and isn't mirroring 2017 or 2021. The view emphasizes that most institutions still don't own crypto, though that should change as regulation and market structure mature. Bitcoin's role as a macro anchor remains, with bipartisan support and growing institutional interest backing crypto's long-term viability. Let's return to Matt Hougan's interview.
Part of it is just, you're saying that the education has become so pervasive amongst these institutions that essentially that's the factor that diffuses the 4-year cycle at this point.
Yeah, and just that they're slow moving. They don't move with the speed of retail investors who moved in and out of assets on a 4-year cycle. As soon as the market turned, they were out. That's just not the way institutions act. They're allocating for the next 10, 20 years. Maybe listeners who have a retirement account from their job, it's not something they think about. They just invest in it every 2 weeks without even imagining what they're doing. That's sort of the way it happens in this space. So once you've made it into the club, once you're part of the portfolio settings, the market could be up or down. They're still going to be buying. They just move at a different pace. It's like a different kind of investor. So I think that's going to play out for a decade. I think, ETF flows as an example. We did $35 billion in year one. I think we'll do $50 billion in year two. I think we could do $75 billion in year three. I think we could do more than that in year four. That's what ETFs tend to do. Flows tend to increase over time. And I think that's what we're going to see from institutions. I just think they're moving into crypto. And I think that's going to take multiple years. And that's going to overwhelm the sort of 4-year cyclicality. We do a lot about talking about that absolute supply versus the absolute demand, which you can measure. ETFs and companies are buying 5-6x all the new supply. We talk about the relative scarcity of Bitcoin versus gold. Gold inflates at 2 to 3 times the pace of Bitcoin today, and that will probably increase, and Bitcoin is shrinking. So I agree. The longer you dwell in it, it's hard to grok. I think when you say this time is different, which is sort of what I'm saying, you have to say why. And I think what separates this moment from the last cycle and the cycle before and the cycle before that is we have 2 whys. The whys are institutions are allocating, they control most of the money in the world, and they move slower than retail. And then the whys are, for the last 6 months, we've been on a new regulatory journey that opens up the market in enormous ways. And if you go back to the last cycle, what was the why? We have DeFi. Like, that's not as powerful a why as the largest investors in the world are now allocating to crypto in size to the tune of like $40 billion a year in ETFs. Or we now have crypto regulation that lets Wall Street interact with crypto. Those are much bigger whys than we have DeFi, or we had ICOs and Ethereum, which was like the last cycle why.
A very retail driven cycle.
Yeah. The first cycle was people can buy Bitcoin. That was a big thing. But we just learned, and then we had the 4-year cycle after Mt. Gox blew up. But the last 2, there wasn't a reason to expect it's different. I do think this time there are those 2 reasons, which institutional purchases and regulation. And I just think those are very big factors. The risk I see for people who feel strongly that this 4-year cycle will repeat is that they'll step out of the market, and then the market will pass them by, and that will be a real challenge. And so to the extent that people are planning to do that, maybe do it in half, or maybe do it at a lower level to make sure you have, and I know most real hodlers do this, they don't step out of the market, but make sure you maintain sufficient exposure that if these two factors, institutions and regulation, really do change the game, you're not at zero. But look, no one cries that much over taking profits on a position after a good 3-year run. So I'm not against that. I would just say be open to the idea that this time it's different. It's happened 3 times. That doesn't guarantee it's a fourth. It hasn't happened 50 times, right? It's happened 3. If you imagine flipping a coin, you can get 3 heads, but that doesn't mean the fourth one will be a head. So I would just say, yeah, it just be open to the idea that it may be different. I think the analogy I like to make is like the Facebook IPO. More so than the internet bubble, because the internet bubble is so charged with emotion. Like if it's 99, we're panicking. If it's 96, we're running into it. If it's 2002, we're buying Amazon stock. But the Facebook IPO is more to me like the Bitcoin ETF launch, which was prior to the IPO. Wall Street was very skeptical of social media and very skeptical of this business that didn't really generate revenue from ads. They didn't understand its value. And it came to market and sort of went nowhere for a while. But it came to market at a $100 billion valuation. Today, it's 1.7 trillion. That's a 17x return over 13 years. That's not really bad. Is Facebook as exciting as it was when it was just on college campuses and you had to be in the know? Absolutely not. But did 90% of its value accrual take place after the IPO? Absolutely. So is Bitcoin as fun as it was when it was on message boards and P2P meetups to buy it? No. Is it as volatile? No. But is most of the value accrual still to come? I think that's the case. Could 90% of its value accrual still be to come? Absolutely. Could it 10x or 17x like Facebook did from here? Absolutely. So I think that Facebook IPO moment is akin to the Bitcoin ETF moment. And maybe that's the pattern we should expect, which is like something like a somewhat boring grind higher, but grind a lot higher, right? Not like 100 to 200K. This is 100 to a lot. And I think that's the paradigm that my mind is in. Look, I think they're interstitials. And I feel that way about my own business, right? Like, why do we need an ETF to own Bitcoin? I have a really good answer for that right now, which is the existing pipes don't fit for Bitcoin for most investors to own it in the way they own most of their assets, and it's just too hard, right? An ETF makes that push button simple. Why do I need Bitcoin in a truly blockchain-oriented financial system where self-custody is easy and has good UX? That's a much harder thing for me to answer. So I think the answer to your question is it's just interstitial. We did built these effective rails, and now people are like putting things on it, but we're not all the way to the mature end state when we won't need a Bitcoin ETF, right? I'm comfortable saying that. I still think there'll be asset managers that supply IP, but we won't need these interstitial wrappers. And I think that's what you're seeing with the MicroStrategy on Solana, although that is a really fun circle.
The education surrounding cryptocurrencies has spread throughout institutions, disrupting the usual 4-year cycle. Institutions act slowly, allocating for the long term, considering the next 10 to 20 years. Once an institution joins a portfolio, it will continue to buy and hold regardless of market movements. Matt Hougan pointed out that ETF flows are an excellent example of this trend. They saw $35 billion in flows in year 1 and expect $50 billion in year 2, $75 billion in year 3, and more in year 4. This growth is driven by institutions allocating to crypto and increasing adoption of ETFs. Demand for Bitcoin is outpacing supply, with ETFs and companies buying up a significant portion of the new supply. This demand, combined with Bitcoin's relative scarcity compared to gold, is likely to drive growth over the long term. The conventional 4-year cycle may not be repeated due to specific considerations such as institutional allocation and regulatory clarity. Matt Hougan believes that these forces will overpower traditional cyclicality and that people should be open to the possibility that this time is different. He highlighted parallels with the Facebook IPO, which was hugely successful despite initial resistance. Bitcoin's value may continue to increase over time, even if it's not as volatile as it once was. As the market matures, the need for investment products like ETFs may diminish, but for now, they're providing effective rails for investors to access Bitcoin. As we wrap up, the big question is, what single factor do you think will have the biggest impact on Bitcoin's price over the next year? Institutional adoption, regulatory changes, or macroeconomic trends? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.